Welcome to the Deep Dive. We go beyond the headlines, trying to really understand the stories shaping our world. Today we're getting into something fascinating, maybe a bit volatile too, the world of silver. It's ancient, yes, but also so essential for our future. And understanding its price. Well, it's more complex than it looks. Our mission today is to cut through some of that complexity, give you a clearer picture of its market dynamics. Okay, let's unpack this.
And to help us do that, we're looking at a really insightful analysis by Doug Young. He's a gold IRA and precious metals analyst.
Yeah, this comes from the Gold IRA Company's Bulletin. It's an independent educational resource, so it gives us a pretty sharp, detailed view of the factors and processes involved here.
Good stuff. So silver,
Yeah.
it has this unique kind of dual identity, doesn't it? Part industrial workhorse, part precious asset.
Exactly, that's key.
Unlike gold, which is almost all about being a precious metal, silver's doing double duty.
Mm-hmm.
And I guess that dual role means its price reacts to way more things, makes it more volatile. Precisely. That's a great way to put it. Inherently more volatile. And when you look at the industrial demand side, it's huge. Silver is in so many things you might not even think about. Your phone, medical devices.
Right.
But a big one now is renewable energy, especially solar panels.
Oh, okay. Solar tech.
Yeah, the global push for cleaner energy, that's directly boosting silver's role in solar technology, which can mean more demand and, well, potentially higher prices.
Makes sense.
And what's really compelling is silver's conductivity. It's just unmatched for certain things. So as tech evolves, like with nanotechnology and advanced electronics, we keep finding new uses for silver.
So it's not just existing uses growing, but completely new demands popping up.
Exactly. It's constantly finding new jobs, you could say. It's not just about what silver was used for, but what it will be used for.
Okay, so we've got this growing industrial demand driven by innovation, but underneath it all, like any commodity, it still boils down to basic economics, right? Supply and demand.
Absolutely. That's the foundation.
So what does that balance or maybe imbalance mean for silver prices day to day?
Well, let's look at supply first. Silver mostly comes from two places, mining and recycling. The big mining countries, think Mexico, Peru, China.
Okay.
Now, if anything disrupts mining in those places, maybe a labor strike or new environmental rules, even political tension,
That could squeeze the supply.
directly, it can tighten the global supply.
Yeah.
And less silver available usually means.
Higher prices, yeah.
Right.
And what about just the cost of digging it up? Does that factor in?
Oh, definitely. Mining isn't cheap. If energy costs go up or regulations get stricter, it costs more to produce silver. That increased cost can also limit supply, potentially pushing prices higher.
Pasha. And on the flip side, demand.
Mm.
If the economy slows down globally.
Then industrial demand for silver usually cools off. Fewer electronics being made, maybe slower rollout of solar projects, that sort of thing.
Which could pull prices down.
Exactly. It works both ways.
But it's not just about the physical supply and the industrial use, is it? There's this whole other layer, the human element. Investor behavior, market sentiment. Here's where it gets really interesting.
You're absolutely right. Investor psychology is, well, it's critical. Think about it like this. When investors start worrying, maybe about inflation coming or just general economic uncertainty.
People get nervous.
Yeah. And they look for safety. Silver often becomes that safe haven.
Like a security blanket for wealth.
Kind of, yeah. They aren't just buying metal. They're buying perceived stability. And when lots of people do that,
Demand spikes. Investment demand.
exactly, a demand-driven surge. And that market sentiment itself, it's swayed by all sorts of things. Economic reports, geopolitical news, even just raw fear. You know, when times feel turbulent, investors often flock to assets like silver.
Okay, so that ties directly into the bigger economic picture. How does silver generally stack up against forces like inflation or big swings in currency values?
Well, historically, silver's seen as a pretty good hedge against inflation. Because it has intrinsic value, right? It holds value even if paper money, like the dollar, loses purchasing power.
So high inflation often means more people buying silver.
Typically, yes. Demand tends to increase as people try to shield their wealth from that currency devaluation. And currency fluctuations matter, too. Let's say the US dollar weakens.
Mm-hmm.
Silver, which is often priced in dollars, might actually rise in dollar terms. But for someone holding euros or yen,
It becomes relatively cheaper for them to buy silver.
exactly. So that can boost demand, too. It makes silver a popular tool for diversification, especially when the economic outlook feels a bit shaky.
Beyond the economy and investor feelings, what about external shocks?
Hmm.
Things like politics, conflicts, new rules.
Oh, Those can definitely stir the pot. Geopolitical tensions, conflicts, trade wars, that kind of instability often lead to significant price swings, more volatility.
Can you give an example?
Sure, think about tensions flaring up in the Middle East, or maybe major trade disputes like we've seen between the US and China. Those kinds of events make investors nervous, and they tend to seek out stable assets. Again, silver often benefits.
Right, the safe haven effect again.
Exactly. And regulations play a role too. New environmental rules might increase mining costs, reducing supply.
Pushing prices up, potentially?
Potentially, yes. And trade policies, tariffs, restrictions, they can mess with how easily silver moves across borders. That directly hits supply lines and influences prices.
Wow, okay, so you have industrial uses, mining costs, investor fear, inflation, geopolitics. It's a lot.
Yeah.
With all these complex factors swirling around, how does the price actually get set? Like, where does the number we see actually come from?
Right. That's the practical side. That's where the market mechanisms kick in. Big commodity exchanges are key here. Places like the New York Mercantile Exchange and WYMEX and the London Bullion Market Association, the LBMA.
Okay, the big trading hubs.
Yeah. They provide the platform, the regulated environment where buyers and sellers meet. And the prices set there reflect all those global conditions, the demand, the supply we've been talking about. They act as the main benchmarks for global silver pricing.
So these exchanges are where supply and demand, physically or electronically, meet. But what about things like futures contracts? People betting on future prices.
Good question. Futures contracts definitely have a big impact. These are basically agreements to buy or sell silver at a set price on a future date.
Right.
They allow people to speculate on price movements or hedge against risk. And the activity in those futures markets, it can really influence the current price, the spot price.
How so?
Well, for instance, if lots of people are buying futures contracts, it signals they expect prices to rise. That expectation can boost current demand and push up the spot price right now.
I see. And you mentioned spot price. Is that different from what I might actually pay if I wanted to buy, say, a silver coin?
Ah, yes. Very important distinction. The spot price is the baseline price for immediate delivery. Think of it as the raw commodity price. But the market price, what you actually pay a dealer, usually includes other costs.
Like what?
Premiums, commissions, maybe costs for refining the silver into bars or coins, transportation, storage. All that gets factored in.
So there's the base price and then the markup for the physical product and handling.
Exactly. Investors really need to understand that difference. And finally, the refiners and dealers themselves, they set their prices based on that spot price, plus current market conditions, their own operating costs, adding that premium you mentioned.
Okay. So what does this all mean? I mean, for someone listening, it sounds like the price of silver isn't down to just one thing. It's this really intricate connected web. Everything from solar panels to mining strikes to global politics to how nervous investors are feeling. It's not just a shiny metal. It's deeply tied into the global economy.
That's it, exactly. And understanding these connections, these forces, it gives you a much clearer lens. You can look at economic news, investment trends, and see how they might ripple into something like silver. Knowledge is always most valuable when you actually understand it, right? When you can apply it.
Absolutely. So thinking about that dual role, again, industrial workhorse, precious asset, and its growing importance in new tech. What could that mean down the road? We hear some analysts talking about a potential surge for silver. We see savvy retirees using it to diversify. How might those industrial demands, accelerating maybe, interact with its role as a hedge in, say, the next decade? It's definitely something worth watching closely, isn't it?